Guys, and welcome back to episode 3 of this mini boot camp that I'm doing here on YouTube. So we've wrapped up the first 2 episodes, going through simple market structure, the basic things of how candles work, time frames, obviously bullish and bearish trends, and so forth, so on. So today I'm going to be showing you kind of this basic strategy, which is about 4 or 5 steps that you can implement in your trading every single day. Okay. And the one thing that I like about this strategy and love about it is it doesn't always happen every day. I do not like trading too much because ultimately the more you trade, the more risk you're putting on the table. So this strategy usually can produce 2 or 3 setups a week. So pretty much what it is I just call it previous session reversal. So as I explained in the previous episodes, that liquidity is in different forms in the market, one being session highs and lows. So basically what we're looking for is to take either the previous session high or the previous session low, and then trading in the opposite direction to what was swept first. So let me draw some stuff out for you guys. Next episode I will be going through the actual strategy in a live manner, going through it in an actual demonstration. But what you're going to look for is simple AMD also. So usually through Asia session, we want to see some kind of consolidation levels like this, okay? So we don't want to see too much movement in the market, because usually if the move happens during Asia, it's usually going to continue through the rest of the session throughout the day. So what we're looking for is kind of like a consolidation level of price here during Asia. So if I mark out my box here, so we've got the lows and the highs of Asia session here, okay? So if we just get some text and we put here Asia, okay, we'll change that to black so you can see it. So that's our levels for Asia session, okay? Consolidation, perfect. So now what we're looking to do is wait for either the highs of Asia or the lows of Asia to be swept. In this case, I will show you, I'm so bad with these tools, unreal, path. So in this case, we're just going to come up here and we're going to break the highs, okay? So this area here between Asia and obviously London that's going to be opening in this demonstration is called pre-London session, okay? So anytime after 7:30 I would deem as valid. If we just get a wick or a little bit of a sweep before 7:30, then I'm not too keen on it. I want that actual push through, so we break these levels at the top of Asia here. So yeah, we've swept to Asia high here, so now we're going to be looking for sells, okay? That's primarily what the previous session reversal is, okay? So we swept the Asia highs, so we'll type in just here Asia highs, okay? Fucking hell, I can't even spell, boys. What's going on? Highs. Okay, so we swept Asia highs. We've had Asia session, swept Asia highs, and we've taken them out. Okay, now we're looking to trade the opposite way. Okay, now there's a lot of factors in the market. You want to have some liquidity resting above Asia. Okay, so you might have had a play down. Because we're going to be looking for sells, our bias we're just going to assume is sells. So there's a lot of selling pressure in the market. So what the market's doing now is coming up to grab some liquidity to then head back down, if that makes sense. Okay, so here we have London Open, and what London Open is going to do is going to usually grab the nearest liquidity. So it could be further up. Let me just say in this case we move a bit further up. Okay, we move to about here. And now what we're looking for is a low to be taken. Because remember, through the market structure video that I did in the bootcamp, here we've got a bullish order flow. So we're creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher high here. So we want to break this leg here, okay, which is called a market structure shift. So I've already said in a previous video, this is called a break of structure. Also, here you have a break of structure, and then so on and so forth. We've got breaks of structure here because we keep continuing the trend, okay? So ultimately, we want to break this low here for a market structure shift. So let's just say price comes down again and takes this low out, okay? we've had a market structure shift. The market is now telling us that it's coming down. Usually I want this leg down, that creates the shifting structure for us to be quite powerful. So in this case, we'll bring it to about here. This just actually shows us there's a lot of sellers in the market. So we're going to be continuing with our sales bias. Okay. After this, we will be looking for a POI on the 5 minute or the 15 minute. So if we get like a POI, which is, let's say here, this is a fair value gap on the 5 minute. Let me just put this in here. 5M FVG. Okay, so this is just a gap in the market that orders have been created. Price needs to come back up to these gaps to then continue down. Okay, so this is going to be our entry. But with this, we also have a Fibonacci tool, which is my favorite tool in the game. Pretty much going from the high that created the shift to the low that the retracement starts. Okay, so as we can see inside of this, these fib levels of the 0.786 and the 0.618, we have our 5 minute fair value gap inside this level. Okay, so either you can put your entry at the 0.618, 50% of the fair value gap, or anywhere in this area pretty much. But just because of fundamentals and the back testing data we've done, I'm going to put my position just inside this 5 minute fair value gap at the 50% range of it. Okay, stops are always going to be above the previous high. Okay, usually they're around 10 pips. Here, just in this example, it says 16.3, but usually they're around 10 pips, 11 pips, around there. We don't want to have too much of a big stop, just because obviously the bigger the stop, the bigger the target has to be, and our target is ultimately going to be previous session lows. Okay, so we usually look for a 1 to 2, push a 1 to 3, but a 1 to 2 is what is deemed profitable for us after collecting data and backtesting for so long. And obviously with market experience, a 1 to 2 is all you need to gain consistent profits. Okay, so we've done majority of the work now. We just have to wait for this retracement. Many times the retracement doesn't happen and you don't get the trade, but this is where being a better trader than the average trader comes into play, because the average trader will get FOMO, enter a trade, probably get stopped out and cry about it. But here you just have to be patient, and if you don't get this retracement back up, then it is what it is. It's just not a trading day. Okay, so continuing on, if I get my path tool here, we start getting this retracement back up. Okay, we want this retracement to be really, really slow, because law of effort. Okay, the price has shown us that it's going to shoot down from this previous leg here. It's absolutely beasted this low, so we want this retracement to be slow. We don't want it to be straight back up into our POI, even though sometimes it can do and can play off. But law of effort is a big thing here. I want the market to show us that sellers are in control. So ultimately, we're just waiting for our price to be tapped. So let's say it's tapped here, right under 50%, and we enter our trade. Stops above the high and our TP at the low of Asia, because it's obviously previous session reversal. We're just waiting. We're in the trade, and let's just say it smacks TP, boom, and so forth. So this basically is the trade in a nutshell. Let me just mark these things out for you guys, so you can see every technical we've gone through in the bootcamp so far play out. So obviously I won't be trading before London session opens. I always wait. I always trade between 8 and 10 a.m. for London, and during New York session, I'll be trading 1 till 3 p.m. This is purely because of liquidity in the market. Usually between these two times on the session opens of London and New York, the market's already made its move and direction for the day, so there's no point staying on the charts for that long afterwards, okay? And as well, like I touched on before, having these time windows to trade in does keep you away from a lot of losses. If you're trading on the charts all day and you're just sat there, you're more likely to trade and you're more likely to risk money and lose it. So let's just say London has opened here, and obviously this is what London is looking like. Now, because of a simple AMD structure that I went through in the last video, obviously we've had accumulation here, and London usually is going to be a manipulation, so maybe New York moves up. I would expect London to continue in this trend, and then obviously we're going to New York with a new frame of mind. But this pretty much is the strategy in a nutshell. Pretty simple. Again, all we're waiting for is previous session, which in this case is Asia, highs or lows to be swept. In this case is the highs. We wait for a market structure shift after this last leg of break of structure. We wait for a big impulsive move down. We have our POI and our fib retracement. We enter at a key level, stops above the high, TP at the low of the previous session, and that's all it is, guys. So the next episode I will be going through this strategy in better detail in a live market. So that will be good for you guys to plug into. But yeah, feel free to analyze this. This strategy is so simple. It's so easy to learn. Very good for beginner traders that are learning the market. It's just a liquidity grab. That's all it is. So yeah, implementing this into your day-to-day trading life in general will make you a profitable trader if you stick to the rules. But you have to be picky with these shifts in structure and noticing when this occurs. But yeah, it happens most days and not. But yeah, anyway, guys, that's all for this video. If you obviously did like the content today, please drop a like on the video, subscribe, go and shout out on the socials, follow us up on there. The link and Instagram will be in the description. So yeah, guys, that's all for today, and I'll see you in the next video. Peace.